Welcome to today's high-powered explainer. If you're trading today's open, you absolutely need to pay attention. From shifting Middle East geopolitics to critical technical setups in major currencies and Indian equities, we've got a massive amount of overnight data setting the stage for today's market action. So let's get right into it.
Here's our roadmap for today. We'll start with global macro and geopolitics, hit the economic data and that all-important RBI decision, dive into the major currencies technical view, and wrap up with the Indian market's tactical outlook.
Okay, let's dive right into Section 1, Global Macro and Geopolitics.
So, what's going on out there? Well, markets have literally swapped bunker mode for bargaining mode. Brent crude just slid below $80 a barrel. That is a massive 10% drop this week alone. Basically, optimism over the Strait of Hormuz is completely overpowering supply fears right now, and that's easing inflation concerns and sending treasury yields lower as bond markets actively cheer the potential for rate cuts.
And diplomatic progress is moving incredibly fast. We've got Qatar circulating de-escalation proposals, Oman talking with Iran about safe shipping lanes, and even President Trump delaying military action to give all this diplomacy a real chance. Honestly, sometimes the biggest market rallies start with the smallest drops in geopolitical tension.
Meanwhile, Washington just confirmed something absolutely fascinating about that recent coordinated FX intervention on the yen. U.S. Treasury Secretary Bessent came out and made it crystal clear. This wasn't just some standard currency trade. No way. It was a massive geopolitical signal to support a key Asian ally, preserve regional financial stability, and give Tokyo some much-needed breathing room for domestic reforms.
So, what does this all mean? Well, this macro relief has set Wall Street completely on fire. The Dow and the S&P 500 just closed at fresh record highs. You basically have two huge forces at play here. On one side, dropping oil and softer bond yields are seriously boosting risk appetite. On the other side, AI-driven equities, specifically semiconductors, are leading the Nasdaq higher. And note this, copper just climbed above $14,000. It's a stark reminder that the AI revolution needs a ton of metal to build its physical infrastructure.
All right, let's shift gears rapidly. Section 2, Economic Data and the RBI.
Looking at the calendar, overnight U.S. job openings fell a bit more than expected, down to 7.36 million, and factory orders took an unexpected dip. So the world's largest economy is clearly losing a little steam, but hey, it's definitely not stalling. Today, we are keeping an eye on the U.S. ADP report and the ISM Services PMI. But let's be real, all eyes in India are glued to that top row, the RBI repo rate decision, which is widely expected to hold steady at 5.25%.
That RBI decision is the headline act today, and the market absolutely knows it. In fact, Indian equities took a breather after a solid 4-day winning streak, with the Nifty dropping 0.64% as investors wisely locked in some profits across realty, FMCG, and banking. Capital inflows are keeping the rupee steady, while the 10-year bond yield eased to 6.82%. Markets are fully expecting the RBI to hold rates, pretty much shrugging off Bloomberg's delay on India's bond index inclusion.
Okay, let's bring the energy up and dive straight into the charts. Section 3, Major Currencies Technical View. Starting off with the US dollar index. The main fundamental soft point driving the DXY right now is that US 10-year yield, which is off nearly 14 basis points from recent highs, all thanks to those Middle East hopes we just discussed.
And this brilliantly illustrates our setup. The index has formed this perfect M structure. The tactical view here is definitely sell on rise. Now, the crucial point to watch is support right at 99.64. If we break below that trapdoor, we are looking at a straight fall down to the weekly pivot at 98.48, with overhead resistance sitting at 100.25.
Jumping over to the euro. Much like the US, that German 10-year bond yield has dropped roughly 12 basis points. But the euro is also battling some serious headwinds, specifically deepening political fragmentation and fiscal friction over their strict stability and growth pact guidelines. Also, definitely keep an eye out for the Eurozone HCOB Services PMI dropping later today. So, tactically, what are we doing? It remains a buy-on-dip scenario. As long as that 1.1544 level holds strong, a breakout opens up a very clear target of 1.1612, with deeper support waiting down at 1.1483. Now, over to the British pound. Cable has been doing some massive flip-flops these past 2 weeks. We've got the energy-sensitive UK 10-year gilt yield down 20 basis points. The big macro headwind here is the Labour government's rapidly narrowing fiscal headroom, as public debt servicing costs are simply outpacing tax receipts.
Technically speaking, this creates a super binary setup for us. We're on breakout watch.
A clean break above that 1.3450 trigger opens up a direct path to 1.3558. But if it fails and breaks below, you're looking at support way down at 1.3393.
Okay, you have got to see this USD JPY setup. Aside from the geopolitical validation of the intervention we noted earlier, the plot is really thickening. Reports are now suggesting Takaichi has actually asked the Bank of Japan to buy even more government bonds to try and curb rising long-term interest rates.
And check out these levels. The pair found support exactly at 155.60. Guys, that is the exact same level where the last intervention drove it down. Moving forward, we face heavy overhead resistance at 158.35 and 158.62, with immediate support sitting right at 157.35.
All right, let's bring it back home. Section 4, Indian Markets Tactical Outlook.
Starting with the USD INR, we're seeing a massive tug-of-war right now. The rupee logged some modest gains, largely supported by foreign banks selling dollars, but those gains were immediately capped by some really aggressive importer hedging. Still, it managed to close near 95.30, gaining over 1% from its recent two-month low.
Our view here remains sell on rise. You can see resistances stacked right at 95.43 and 95.82. But the absolute key to this whole chart is the weekly pivot at 94.87. The pair needs to break back into the channel, and honestly, unless that 94.87 level snaps, the upward pressure on the rupee is just going to persist.
Finally, wrapping things up with the Nifty. As I mentioned earlier, the index unfortunately snapped its 4-session winning streak yesterday. We saw it gap down that just got aggravated intraday, hitting a low of 24,447. Now, this was driven by a pretty messy cocktail of weekly derivatives expiry, general caution ahead of today's RBI announcement, and some heightened volatility from the rollout of the NSE's new extended closing auction session.
But here is the silver lining. We did see some late buying of the dip, which led to a nice little recovery right near the close. Because of that resilience, the overarching technical view holds steady at buy on dips. We've got resistance sitting above at 24,811, with supports lined up nicely at 24,561 and 24,344. And that brings us to the million-dollar question for today's session. With diplomacy cooling off oil prices and AI just absolutely supercharging equities, will today's packed data slate and that crucial RBI decision validate this massive relief rally? Or are we going to see some cracks exposed in the narrative? Well, the technical levels are set, the data is incoming, now it is time to trade the plan. Thanks so much for joining me on this explainer, and I will see you out there in the markets.